And it's very easy to spend 5,000 Rand. I can go out now and before I'm out of the door, I can spend 5,000 Rand. It's a very dangerous statement if you don't understand it. You have your business and your personal accounts. You need to check what is your monthly salary, what is your budget that you need to kind of live from, and make sure that the business can actually afford that. If you employ young people between 18 and 29 years old and pay them between 2,000 and 6,000 Rand per month, South African ID, you can claim the ETIs, the employment tax incentives, on a monthly basis from your pay. And it's on average about 1,000 Rand tax credit that you actually receive from SARS. Obviously, you as the directors also need to pay yourself a salary and pay as you earn on that. It's on the whole payroll. So if you employ, let's say 10 of those people, it's about 10,000 Rand a month. And let's say your pay as you earn is 20,000 Rand a month, right? Between the two directors. Then you declare the pay as you earn of the 20,000 Rand, but you deduct the 10,000 Rand ETIs and you only pay the 10,000 Rand difference to SARS. So you automatically win a 10,000 Rand per month as a employment tax incentive. You actually withhold it from SARS before you pay it over. So we try not to do a refund because it becomes very difficult for SARS to get refunds, especially currently. But we like to declare the pay as you earn and then deduct that ETIs from the pay as you earn. So effectively, you should have paid SARS 20,000, but because you have the ETIs of 10,000 Rand, you deduct that, and then you only pay the difference over to SARS. A real game changer is the ETI on pay as you earn. There's a lot you can do. I mean, you can kind of manipulate if you have the stock, make sure that every 2 months we buy a lot of stock that you have a lot of that you can claim back, but you can obviously only do it to a point where you have it makes sense to have that amount of stock on hand, and you need to keep going doing that, otherwise it doesn't make sense. Very simple. It's VAT invoices that you raise to clients and VATable allowable deductions that you can make. But like you mentioned, the biggest thing with that is more the management of the VAT payable to SARS than the actual doing anything else with that, because you just need to make sure if you're a consulting business or anything that you sell, that you can actually charge the VAT on top of the invoice. Always try to add the VAT on top of the invoice. So if you charge somebody 1,000 Rand for a consultation, you charge them 1,000 Rand plus VAT, and then obviously the VAT that you already pay on the expenses you can still deduct, and then you just pay the difference over to SARS. To open up a call account and just transfer that VAT, keep that just aside, and then VAT is more a management thing than it's really something a savings thing. If you manage it correctly, you still get. I mean, if you charge correctly on your invoice and you keep the VAT aside, then the rest, all the deductions, is really just a saving of the VAT. It's really just an advantage to you. I had a lot of clients that would do that quite religiously, keep the VAT aside, and then at the end of the year they pay their holidays with that, or they put it in their bonds. The better option, put it in their bonds, and obviously they build up some savings because they've been doing that. And you want to use it for a new project, and you start using the VAT, the funds for a new project, forgetting that you need to pay over the VAT. It's always better to just keep it aside, to keep it simple. Treat your business as your employer, and make sure that you take your salary and stick to your salary, and every 3 months, 6 months, or a year, you take a dividend, take a profit share additional to that. But by doing that, you don't deflate your business. Obviously, grow your capital in your business. Otherwise, you will just every month, if there's an extra 5,000 Rand in a month, might not sound a lot, but if you keep doing that every year for a year, it's 60,000 Rand that you accumulated in capital. And it's very easy to spend 5,000 Rand. I can go out now and before I'm out of the door, I can spend 5,000 Rand.
Hi, Jasper Basson here. I just wanted to remind you about the Daily Entrepreneur Tips series. It's a business growth series for entrepreneurs and contains financial information and also information to grow you as a person and your business, because we will never grow our business any higher than we grow ourselves. So click on the link below and I will send you daily information to grow you as a person and your business, and it's for 365 days of the year.
sure if you heard the saying, pay yourself first. A very dangerous statement. Setting your salary, make sure you know what your salary is, stick to that, and out of that salary, make sure every month, before you start spending anything, it goes to a specific allocation, a specific fund that you, whatever it is, whatever tickles your fantasy, Bitcoin, shares, in property, it doesn't matter. Make sure before anything goes, that goes off to that. So that's pretty much what pay yourself first means for me. Obviously, you have your business and your personal accounts. So the business, you need to check what is your monthly salary, what is your budget that you need to kind of live from, and make sure that the business can actually afford that. That's the first point. The second point is, if the business can afford that monthly income, stick to that monthly income. So you make sure that part of the monthly creditors of the company is your salary as well. The next thing is you receive your salary, and from there you make sure that every month, as you receive your salary, a certain amount goes to an investment account, whatever it might be, whatever looks good for you. And you can do the same in your business as well. You can start with a call account or money market, but you can proceed in a company to kind of also build up capital. So I mean, if you're currently renting just give you an example, if you're a business where you rent a workshop, then slowly but surely you want to get to a point where you can save some capital in your business account, in a call account or money market, and slowly get to a point where you can put a deposit onto a workshop and actually start buying your own workshop. So it's kind of a slowly but surely growth into the capital, either in your business or your personal. I mean, you need to look at this various options of investments, and I would start with something like a tax-free savings account. Tax-free savings accounts, it's any bank, Allen Gray, those kind of places, and you can invest chunks in that every year, and the total of, I think it's now 500,000 Rand in total, where all the proceeds that you receive on that, capital gains or interest, are tax-free, as long as you obviously keep it in there and it grows from there. So that is something to look at maybe initially, and then from there you can start growing. And I mean, if you educate yourself on something like shares or property or anything like that, you can start playing around with that as well, whatever works for you. And there's no set way, but it's whatever works for you and in your interest, and obviously we can educate yourself on and kind of invest from there. A lot of people are very good salesmen, but they're not very good administrators. So they actually make a lot of sales, but they never be able to collect the money or properly use the money and properly administrate the money. Regarding debtors, I'm very strict with debtors. There's very seldom that we do any work on credit. So we quote the client, we get 100% fee in, and then we start doing the work for them as soon as possible. It's not very easy in all industries, but I mean, every industry you can still ask a deposit, and in this economy you can't go without asking a deposit. I mean, on the worst case, I will go for 50% of the fees, and before I finalize everything, the client needs to pay the difference. So I always tell the story of stucco Italianos, people that they decorated the flooring that they put on. So there's a lot of layers in that when they do that flooring. But the last layer is the most important. If you don't put that last layer on, there's like a sealer, then you can't do anything. You can't do anything with the floor. So before you start, they ask for 50% deposit. During the course of that time, there's another portion, and the final 5 or 10% need to be paid before they come the last day. So it's always kind of a leverage on your side against the client, in the sense of, not in a bad way, but just make sure securing that you will actually get your funds.